Over to you.
All right. Are you all seeing my screen?
It's coming. It's coming. Yeah, you can see your screen.
Are you all
Very
seeing
well.
my screen?
Yes.
Yeah. Good evening. Good evening.
Nice
Good
and
evening.
big,
Oh,
man. Nice and big screen.
yeah. That's how I do it. I like using my my PC to teach, so
Good.
you see everything. You know. Yeah. Today we are going to discuss about market structure. I want to go in details about market structure. Hope you are hearing me, guys.
Yes, yes. Very
Yes, we
audible.
can hear you.
We can hear you.
You are clear, sir.
Okay. Okay. All right. So tonight we are going to talk more about market structure. Is very important. As a trader and as a price action trader, market structure is the number one thing that one should know before entering the market. As we all know, trend is always our friend. You don't trade against the trend. You don't go against the trend. Market structure is all about what? It's all about the impulsive movement of markets, be it uptrend, be it downtrend, be it sideways movement, be it what? Or you can call it ranging market, or you can call it choppy market. Ranging, choppy, and trending market. They are all what? They are all types of market structure. The market structure helps, to tell the trader where the market is currently what is going, whether it's going bearish, whether it's going what bullish. Without it, you will not be able to identify where to trade. Without it, you will be making mistakes. The market makers will be using you as tacit liquidity. So market structure is very important. Very important as a trader. So today we are going to discuss more about it, more in details about it. You will know when market is trending, when market is moving sideways, when market is in a choppy mood. You know when to trade and when not to trade. If you see that, you say, okay, this market is not tradable. Let me just rest and see if it will give me clear direction before I trade. You know when the structure changes, when the trend changes, you also know from today's class. It's very important, So today we are going to talk about market structure 1.2. Coach DK taught 1.1. So today I'm going to go in full details about it. So hope you are hearing me, guys.
Yes, sir, we hear.
All right. Hope you have your pen and paper, because this class is a practical class. So market structure is one of the most important skills that you need as a trader. And it is the ability to read the market structure. It is the ability to read the market structure. And it is critical that it's a critical skills that allow you to use the right words, price action strategies in the right market condition. That's market structure, is the most important skill that you need as a trader. You need it. Without market structure, you will not succeed in trading. You will not succeed as a price action trader. You will not succeed as a technical analyst. And it is a critical skill that allows you to use the right price action, the right price Why are we price action traders? We are price action traders because we trade based on what we see, based on what we see with our naked eyes. You understand? So you, being a price action trader, you trade with your naked eye. You don't trade with what? You don't trade with indicators. Indicators lack so much. So as a price action trader, we bring a lot of what? We bring a lot of other technical tools. We bring a lot of technical tools together to give us a confluence. What I mean by technical tools is that, one, our market structure. Two, support and resistance. They are technical tools. Support and resistance. Three, we bring trend line. Four, we identify our supply and demand zone, the key zones, on charts. Four, you now use candle analysis. Candle gives the last confirmation. You have your candle analysis, you have your chart patterns, whether continuation chart patterns, whether reversal chart patterns. They are what? When you bring them together on charts, it gives you a confluence, overall view of what? How the market is. To give you overall view of where to take your entry points. It will give you an insight of where to take what? Profits. Where to take your what? Your loss. You understand? Where you place your stop loss is being determined through your analysis. Without analysis, you can't be able to determine all these things. Your entry point, which is very important, your exit point, which is your stop loss, your target point, which is your take profit. So you need to bring all these things together as a technical what? As a technical trader. So price action is very, very vital. It's number one thing. If I'm doing my analysis, I always make reference to what? Market structure. Let me see. I will say, okay, let me see here where the market is going, whether it's trending up or it's trending down. You understand? As you can see, this market now that I'm looking at, this is Telos. If you're looking at this market now, the market is trending down like this. On seeing this market now, it's going down. It's going down. Before, it was going up here like this. It was going up, making an impulsive move. As it's making an impulsive move, it's also doing what? It's also doing some corrections. Markets cannot move like an airplane or like a rocket straight to the moon. No. Even airplanes, they witness turbulence. You understand? So a market is not always a smooth ride to the moon. No. If you go, you come back, you rest. There's some point that where market will move impulsively, then it will now rest. That resting will now be in form of range. It will rest, small rest, before it will now break out again and continue its movements. So market structure is very, very important as a trader. Now, the market structure is the study of what? Market behavior. You can write that, you can write it down. Market structure is the study of what? Market behavior. So if you can master the skill of market structure, when you open your chart, you'll be able to answer what? Some important questions like, what are the crowds doing? You know, if you are trading, you are not seeing, for example, now we have our normal local markets, the ones that will go to our, let's say, shopping mall, or the one will go to the, local markets, you will see people that you are having transaction with, right? Hello, let's make this class interactive.
Yeah,
I like
Yeah,
we are clear, sir. Yeah, we are following. You are following.
Okay,
yeah,
okay,
but,
all right.
but
Hello.
yeah, we on board, sir.
All right.
Yeah, we are here, sir. We are here, sir.
All right. So
Yeah,
just
we are
like,
there. We are listening. We are listening.
just like we have other, please endeavor to mute yourself, so I will not have interference. So just like we have our normal local market now, if you go to maybe a store, you want to buy something, you are seeing who you are doing business with, right? But here, you are not seeing the person that you are doing business with. Remember, this is a marketplace. What you are seeing is your candles. You understand? And how do you determine whether the market is buying or whether the market is selling? It's by what? By charts. You determine where the sellers are. You determine where the buyers are. So this market or market structure will tell you what? You ask yourself, what are the crowds doing? What are these people doing here? What are they doing? I'm seeing charts, candles with wicks and all that. What are they doing? It's from market structure that you'll be able to determine, what these guys are doing, what the market makers are doing. Market makers are the key players in this market. They are whales, all these whales that you are hearing, because they trade with large volume of money. We are retailers, we are retail traders. So we feed based on what they are doing. If you are smart enough. So then you ask yourself, what are the crowds doing? Who is in control of this market? Ask them whether is buyers or sellers are in control. What is the right time and place to enter or to exit the market? On when you need to stay away from the market. So you ask yourself all these questions. There are some points whereby market will be kind of give you a clergy look, like, you will not understand how the market is going. The chart will not be clear. You will not be able to spot your key zones, your support and where you place your support and resistance. In that kind of situation, you do what? You stay away from it, because you are not spotting what? You are not spotting the important areas where you can make your entries. You stay away from it. So you can see market structure is very, very good, very, very important. It's the number one thing that you need to do as a technical trader, so that you will not make mistake and maybe you jump in. Buyers are buying, you now started selling. You are selling in a buy market, or you are buying in a selling market. As this market is selling now, any buy that you buy here is a pullback that you are buying. It's a correction. So this will now bring us to what? To the types of what? Market structure that we have. Any questions so far? Any question? Hello?
Well,
Any question? I believe no question. Please mute yourself. Mute yourself.
mm,
All right, let me continue. So types of market structure. You can write it down. Types of market structure. There are three types of market structure according to price action. There are three types of market structure according to price action. Number one, we have trending markets. Number one, we have trending markets. Number two, we have ranging markets. Then number three, we have choppy markets. I'm writing it down. One, I said trending markets. Number two, I said ranging markets. Number three, are you seeing my screen?
Yes, sir. Yes, sir.
Yeah. Types of market structure. One, trending markets. Two, ranging. Three, choppy. So let's go to trending markets. Trending markets are simply characterized by a repeating pattern. Trending markets are characterized by a repeating pattern of higher highs. You can underline repeating pattern of higher highs and higher low. Those are the key words. They are characterized by a repeating what? Pattern of higher highs. Higher highs. If I want to put it, sometimes you will see me using HH. When you see HH, it means higher highs. And what? Higher low. So trading markets are characterized by a repeating pattern of higher highs and higher low in an uptrend market. In an uptrend market, and lower highs and lower lows. In a downtrend. Are you following? Yeah, I said trending markets are characterized by a repeating pattern of higher highs and higher low in an uptrend market, and lower high and lower low in a downtrend market. So at this point now, you can see I'll be using a LH for lower high and LL for lower lows. So let's continue. I will give you what? I will give you a representation now, a kind of a picture representation of how it works, you know. Then we still go to chart and identify them. Now, what I mean by trending markets are characterized by what? Repeating pattern of higher highs and higher lows. You know, for example, market makes this move like this. Hope you guys are familiar with trading view and how to make use of it. It's the best tool in the world for what? For technical what? Analysts. Just like we have your Microsoft Word or Microsoft Office. You can be drawing, you know, if you want. So this is what I mean by what? Market making repeating what? As in making what kind of patterns of higher highs and higher lows. So this is an uptrend. This is an uptrend. On seeing this now on charts, I will know that yes, this market is really trending. It's going up. It's not going the other way around. You understand? So as the market is going like this, it's making what? It's making same patterns, you know, giving us what? Same patterns. Then as it's moving, here will be what? Here is our higher high here. This place is our higher high, you know. Then here will give you what? A higher low. Then we have a higher highs here again.
He said the screen is too close. We are not seeing all the screen.
You're not seeing on my screen?
Yeah.
I think you should zoom your screen. You can zoom from your screen.
Okay, I should zoom it.
No, the person complaining can zoom from his screen.
Okay.
Just zoom your screen. So the market will be giving you what? Higher highs and higher lows. Then here is our higher lows again. You know, so as the market is giving you higher highs and higher lows, then you say what? That the market is what? Is trending. On seeing this type of market now, we know yes, the market is trending. It's a buy market. It's a buy market because it's making what? All this move here is impulsive move. It's making an impulsive move while doing what? Corrections. The ones that we have below here, the higher lows are the corrections. Why here is what? Impulsive. The higher highs are the impulsive move. Why the higher lows are the what? They are the corrections that the market makes. So as a trader, I will not enter my market or enter this buy market now at the higher highs, for example. Because if you enter at higher highs, where will you place your stop loss? For example, now I want to buy this market, to long this market. I will long from the peak here. For example, that means I will put my stop loss at the higher low. What will happen? What will happen? The market will just go and test that place, hit my stop loss. You will not make profits. So, being a price action trader, for me to enter this market now, to take profit from this market, what will I do? Is either I will do what? I will make my entry at this particular place. You understand? Or I will wait for me to see the clear view that what? Structure has broken. So I will wait for market to give me what? The first swing point, which is this place. You understand? Then I will now do what? I will now make my entry at this place. You know, this market can be tricky sometimes. You know, it can be tricky. The reason why I say it can be tricky is that, one, let's say now you are hoping to see, let's say a double bottom here, like this now. Let's assume that market was selling. Then we now see something like this. We now see a double bottom. Let me bring this. You now see a double bottom here. You say, it's a double bottom. Oh, that the market as in is a reversal pattern that market will soon what? Reverse to buy. Before you know it, this double bottom will change. It will change to triple bottom. You understand? So you have to wait. You have to wait until structure breaks. You understand? You now say, okay, structure has broken. You know, I will now have a smooth ride. Like here now, you can see that what happened here? This is a double bottom. Neckline broke here. Price broke, then retested at this particular area. So if I'm to make my entry should be at the the first swing point, which is this higher low. Are you following, guys? Are you confused? Talk to me. Hello?
We are following, coach. We are following. Please go on.
Please, sir.
Yeah. Yes.
How do you got this line, this brown line, this long line? How do you got it?
Is from the rectangle. Look at my. This place is the most, as in the frequent tools that I normally use.
Okay.
So I have to add them as favorites.
Okay.
You understand? You can get them from this place.
Okay.
Coach.
Okay.
Yeah.
Coach.
Yes.
Which sign do you use, which are the green and red, to identify your stop loss and your entry point? Is it the Fibonacci or what?
No, it's not Fibonacci. It's not Fibonacci. Is a tool.
Which sign did you use?
Yeah, look at.
Yeah. So which one did you use? Which had the red and green?
You can see. You can look at my screen. You see this place now. This is the long position. If I'm longing the market, this is the tool that I will use.
Okay. And where do you start it from, and where do you know where to end it at?
Okay. Let me bring a chart. Let me bring a
All
chart now
right.
to show you.
Yeah, that's the one which always confused me to know where you start and where you
Okay.
end it, to identify the
Okay.
loss and entry
Don't
point.
worry. Don't worry. Let me bring a chart now.
Thank you.
A chart that I did, the analysis that I took, but I was so busy I didn't monitor the thing again. You know, at this point, this is run, for example. You know, after having doing my analysis, I wanted to short this run at this particular place that you are seeing 8.6. You know, what gave me this confidence that market will reverse from these points? One, you can see here is a zone. You can see this was a resistance. You understand? Broken out, turned support. You understand? You can see that what market, this is our trend here. The trend started from here, formed what? Higher highs, higher low, higher highs, higher low, higher highs, higher low, structure, higher highs, higher low, higher, till it gets to this point, 12.9. Then before it still started reversing. You understand? Now that what? This is a clear what? Zone. This place is a zone. This 8.6 is a zone. And price reacted what? Reacted very, very well at that particular zone multiple times. Multiple times. So and that's okay. This place that price will do what? Will reverse at this point. So if you know your candle analysis very well, you can see this candle here. Are you seeing this rejection candle here? Are you with me, guys?
Yes, sir.
Yes, sir. Yes, sir.
Are you seeing this buy
We're
rejection?
with you.
Are you seeing
Yes.
this buy rejection candle?
Yes.
So I'm seeing this now. Notice that yes, sellers are in the market. You understand? Then for me to place my entry, I will wait for me to get a confirmation here at this particular zone. I'll wait to see how price reacts. You can see wicks. There are a lot of wicks here. You understand? Price broke this support, retested here, started what? Dumping. So you can see weakness. So on seeing this now, I will now use my what? I will now use my sell entry. Are you seeing how I did it? Are you seeing how to place it?
No,
Then,
that's where did you start drawing it from?
After seeing this last candle here signifies what? Sell. This candle shows a rejection. There was a rejection here. Who can tell me the name of this candle?
Upside hammer. Upside down. Upside hammer.
Upside hammer.
Downside hammer. What is it called?
Hanging man.
Not really a hanging man. Not really a hanging man.
Is shooting star.
Thank you.
Shooting star.
Thank you. So on seeing this shooting star here, you understand? I will know that yes, sellers are in the market. So I will now wait for that candle to close. You understand? Then where the next candle started from, I will place what? I will place my sell order there. You can see that my entry point is at what? 8.6. 8.6. You understand? Then you now do what? Determine what? The next support. You know, this place is a resistance. We all know it's a resistance, right? Hello?
We can hear you.
Yeah, let's flow together. You know, this point is a resistance point.
Yes.
It's a resistance point. Then our support area now will now be what? 7.2. Look at our support area. Look at where price is going again. So I will now draw it, you know, to 6.7, sorry, 6.7 is the next what? Major support area. Are you following?
Yes.
So
yeah,
your stop loss should now be what? your stop loss should now be above the tip of this week. Let me zoom my candle, my chart. You see this week, that candle, that shooting star that was formed, then your stop loss will now be what? Slightly above it, slightly above the week. Are you following? The reason why it should be slightly above the week is that so that if price should reverse back to test that week, it will not hit your stop loss. Are you following?
What did,
Yeah.
What did you say we call that? What do you call that tool?
Which tool? No, you will see a buy.
The one you are using, that one.
Okay, let me show you where you will get it from. Are you seeing my
It
long
just
position?
reflects long position, yeah.
Long position, short position. So I had to highlight it as my favorite tool.
Oh,
when you highlight
okay.
it will appear here. It will appear here as your favorite tool. You understand? So if you want to place your what sell, you sell from a supply zone, right? You sell from a supply zone. Anywhere you see resistance, it signifies supply. Anywhere you are seeing support, it signifies what? Demand. Right? You buy from the demand level and sell from what? From the supply level. So this place is a demand zone. Sorry, it's a supply zone. You understand? It's a supply zone. So we are now heading to what? A demand zone. Where if price should approach 6.7, you must see a reaction immediately. Price will leave a week there, showing that yes, I've jammed something. I've jammed a hood rock. Are you following, guys?
Yes, sir.
Yeah, but I have a question.
Yeah, ask your question.
How about when that shooting star it's in the upside position, that is when it's facing the downward side, what are we to do? We are to long, right?
Okay, once you see let's say a candle now, for example, this particular one, this particular candle here, you see this one?
Please.
Yes,
this blue one that you are seeing now.
Exactly, yes, that one.
Who can tell me the name of that candle? Let me know if you know your candle analysis.
Inverted hammer.
Thank you very much.
Yeah, that's the inverted hammer. Yeah.
Thank you very much. You understand? So you can see that what? You don't joke with candles. Candles give you last confirmation. It's the last confirmation that it will give you. You understand? To make your what? To make your entries, to know that yes, buyers are in the market. Likewise, this now. Who can tell me what this candle is?
That is shooting star and a boot.
Is that?
Is a boot. That the first one is a shooting star. Then the white one beside it is bullish and bearish engulfing.
Yeah, you don't call it shooting star. Rather, you call it bearish engulfing. It's a bearish engulfing.
Why do we call it bearish engulfing? Is it because the both of them are merged together?
Yeah. Okay. Hello. Please mute yourself. Mute yourself. Mute yourself. Okay. The reason why is bearish engulfing is that when you look at the candle open, you know, the open starts from this place. You understand? The open is equal, but the closing of the candle is huge. The white one engulfed completely. It engulfed completely the small candle. So whenever you see an engulfing candle, the bearish one will be bigger than the what? The bullish one. The blue candle signifies what? Bull candle. While the white candle signifies what? Bearish candle. So it engulfed what? The blue candle completely. It will eat up that blue candle. Are you following? The person that asked the question.
Yes, we are following.
The person that asked the question, are you? Hello?
I am following. I'm following.
Yeah.
Yeah, we are fine. I'm fine.
So the white candle engulfed the blue candle, which is what? That blue candle is a bullish candle. So whenever you say
thank you, leader.
Bearish engulfing, is a sell.
Okay, now after that bearish engulfing, the next one at the middle, I can see that they are both on the same level. What do you call that? Where you
Which
have
one?
your cross? No, at
This
the middle
one?
where you have no the other one, the other.
This one?
By your right hand.
This particular one?
No. Go the other way. The top,
Yeah.
the top.
Yeah.
Yes, the top. Yes, the top.
Okay. This is a bearish engulfing also. You can see that what? The white one closed below what? This particular one.
Okay.
Are you following? The closure
Okay.
are not the same. They are not the same. The closing of the candle are not the same.
Okay. Anytime they are not same, it means
Yes.
it's bearish engulfing.
Yes. Likewise, what?
Okay.
Bullish engulfing too.
Bullish
You can
engulfing.
see
All right.
this
All right.
particular
I can
one
see, yeah.
engulfed. This particular one engulfed this white one.
Okay.
So that's how to identify. Just, you know, in technical analysis, for you to get technical analysis very well, it's it's practical based. It's practical based. Anything that you want to do, just go to your chart. You will see it. You just scroll. Look, pick any time frame of your choice. If you want to identify them, just be circling it the way I just circle. If you circle it, you just name this one. Like this. Bearish engulfing.
Okay.
Are you following? This is the best way. This is how I did mine. You just name this one, bearish engulfing. You go again. You track bullish engulfing. That's how to identify it. Inverted hammer. Before you know it, you become an expert. Are you following?
Yeah, we're following.
You become an expert. Likewise, what? Likewise, drawing your support and resistance. You go to your chart. You can zoom in your chart very well. Zoom in your chart small. Zoom in small like this, so that you'll be able to see. You're able to see your clear zones. Are you following? You can see where price struggled very well. You can see this middle now. Price struggled very well here. They have what? Multiple touches. 1, 2, 3, 4, 5, 6. So on seeing this, you know, this place is a solid word zone. The price struggle within that line. That's the best way to do your support analysis. This is, you see, this thing is not what? It's not difficult. But when you don't practice, it becomes difficult. Just like as you are seeing this thing now, you will still be able to identify what? Identify your what? Your chart patterns. You'll be drawing your chart patterns like this. You draw your chart patterns. You give it name. You know, there are chart patterns, right? Hello?
We are with you.
Yeah, right.
Yes, coach, we are with you.
There are chart patterns, right? So on seeing this now, you'll be able to identify your chart patterns. When structure breaks, you know. So let's continue. Sorry, it will not eat our time.
Yeah, please, I have
Just
a question.
Just one last question, teacher.
All right. Go ahead.
Hello.
Yeah, I'm with you.
Yeah, on the one that you removed, on the chart that you removed, I just wanted to ask something.
Okay. I should put the chart back.
Yeah.
All right.
Right. That one, it's okay. Why are you having in the middle, you have got simple straight lines for resistance and support, but on top and bottom, you have got the thick brown lines. What is that?
Okay. You know, if I'm drawing zones, now, I normally use these rectangle lines. You know, it depends on you. You understand? To use any color of your choice, to use as in how you want your chart to look like. It depends on you. You understand? So now that I have this,
No, I understand that. I'm just saying your zones, you have put the top and the bottom, and the middle one, you put your ordinary lines. I'm trying to say, can one just put their zones, the top and the bottom only, and the middle, it's not necessary to put your zones?
No, it's important to, it's based on what you are seeing. It's based on what you are seeing. You understand? Like this line that I have here now, it shows that what? It shows my support and resistance. Where price will touch, you understand? It will have effects. You know, just like this red line now, if you observe, this place. You see here, all these areas here, this was a resistance. It broke resistance, dropped, now found support. It should now be what? Resistance, turn support. Here, it turn support. The price will break again, break inside. It was finally difficult to break below this place until now broke here and use this place as support. Are you following? Just like what I want to tell you guys now on this telus. On this telus here. Just like this place now that we have. Here is our resistance. So price broke this resistance. You understand? And retested here. Now using this resistance as a support, as a base to take off again. Are you following? As price is making what? Higher highs, higher lows. Those higher lows that price made, price will revisit them later on. Are you following? So I'm coming with this picture now that I'm drawing here. You will be able to understand. You understand that that diagram that you saw before.
Okay.
With this thing now that I'm explaining, because I will draw it to the point where structure will change. You will notice that structure has changed. Then the downtrend will continue. The sellers will overtake the buyers. So that's why I said market structure is important. Hello?
Yeah, I have a question.
All right.
This the demand zone and the supply zone. Like, how do you really determine that zone? Are you comparing the previous support and the previous resistance to determine the supply zone and the demand zone?
Yes. Yes.
Okay.
You know, right now, you see this place? You see here? You see this area? It's also a zone.
Okay.
Here.
It's also a zone.
It's also a zone. What are you seeing here now? Price broke from this double bottom here, right?
Yeah.
It broke from here. Now, you know, here is our neckline. Now retested the neckline here. You understand? Then price broke out from this particular resistance again. Now retested as a base. You know, now broke out again. Retested here. So this place will now be what? Resistant. Here will now be what? Support.
But yeah.
So it will now turn to what? Resistant, turned support. Are you following? Remember,
Yeah,
I said as price is moving up, uptrend, the higher highs are the what? They are the impulsive movement that price makes in an uptrend what? Movement. They are impulsive, they move impulsively. While the higher lows are the what? Are the corrections. Are you following? The higher lows are the corrections.
Yeah. Then my last question is this. So yes, can we say the correction now at the higher lows? Can we say those corrections are also retest?
Yes, they are retest now. They are retests. Okay. Are you following? So price will visit these areas in the future. Remember, price will visit this area in the future.
So now, is there a difference between retracement and retest? Or are the two are the same?
Retracement is the same thing with correction. If you don't want to call it correction, you call it what? Retracement. If you don't want to call it retracement, you can still call it pullback. Are you following?
Yeah, I'm with you.
So sometimes I will use retracement. Sometimes I will use pullback. Sometimes I will use correction.
Okay, thank you.
But remember that price will revisit this higher low in the future.
Sure.
So let's continue.
Just a quick one, coach. Just a quick one. How do you save? Let's say I'm on the rune page and I want to save the supply and demand zone, like my resistance and support line.
Please, can you come again? I didn't get the question very well.
All right, I'm saying, how do you save a page? Let's say I'm on rune, and then I want to save the page where I've done my support and resistance line, so that tomorrow when I come back to that, I don't start again doing my support and resistance.
Okay. There is a way we normally do it. Let me bring down this particular chart now. This is on a daily chart. Now that I want to draw my zone, you see here.
Yes.
Here is a zone. You know why? How many touches did you see here? You see one, you see two, you see another one, you see another one, you see another one. Then you can see a weak rejection here.
Yes.
Are you seeing that immediately price touch this particular area? Are you seeing the reaction?
Yes.
You can see the weak rejection here to show that what this place is a stumbling block. So if buyers can sustain this zone now, what will happen? Price will
start going up.
We reverse immediately. Buyers will have full control. But if buyers are weak, what will happen? Price will break below here. Price will do something like this. It will break below here. And do what? And retest. It will now retest this particular place here as a resistance.
Okay.
Are you following?
Yeah.
So price action is very, very sweet. So that's if sellers overpower what? Buyers at this particular zone, price will do what? Break below, retest, and continue what? Selling. You see it?
Yes, to now come back to that previous support.
Yeah. Yes. So it will now use these areas as what? Resistance. These areas will now be what? Resistant. When it breaks this place, here will now be what? Support turned resistance. Boom, price will fall again.
Okay, coach. So my question was, after drawing all my trend lines, let's say I want to revisit it again tomorrow, but I don't want to start drawing the trend lines and the resistance and support.
You don't want it
How
to
do I
clean,
say?
Abby? You don't want it to
Yes.
clean. Okay, if you don't
Yes.
want, after doing your analysis, if you don't want it to clean, just come here and lock your words, lock your chart, lock all drawings.
Okay. All right, thank you.
Lock all drawings. Or after putting this zone here, you can see, come here and do what? Lock.
Okay.
It's locked like this. See, you can see, I can't remove it.
Thank you so much.
So that is how it is. If I want to shift it now, you can see. I've unlocked it.
Okay.
Are you seeing it?
Yes, we are seeing it.
All right, let's continue. Any more questions?
Also, hello, sir.
Yeah.
Go back to that chart, sir. Sorry. To
Okay.
the chart. Well, like the former question she asked, like, can you use a text and identify it there, like a support? Like, can you use a text to identify a support?
Okay, let me show you now. Let's just do a practical. Like I said, this place is a zone. If I don't want to use this now, I will delete it. I will use what? I will use a horizontal line. Let me color it red. You understand? You know the reason why I use colors. I can decide to write this now. I can decide to write it test daily. Are you seeing daily here?
Okay.
Are you seeing daily? So that
yes,
whenever, if I go to another time frame like H4, if I see this now, daily here, we know that price is touching what? The daily support and resistance. Are you with me?
Yes, sir.
Then, for example, now let me trace another support and resistance line. You can see this area. This place another support and resistance. Then I will now write what? Daily here. Then if I should go back to my H4, you can see that line is still showing. Are you seeing?
Okay.
Are you seeing that? Look at another time frame, which is H4. You can see that price visited here 1, 2, 3, 4. You can see that this place is a very good zone too. Are you following? If I go to H1, that same line will still be here. Then on this H4, I can decide to use another color again. You see this place? I decide to use green on H4. Type it H4 to name it H4. Are you following? This is how to do support and resistance. So you can see here, there's a touch here. There's a touch here. There's a touch here. There's a touch here. There's another touch here, which is what? Resistance, support, this resistance. Are you following? Then another one here is this area.
Awesome.
You can see 1, 2, 3, 4, and 5. I will still teach you what to look out for when drawing support and resistance. Sometimes the line will not be straight. Sometimes it will overlap. So we will leave that for another class. We will leave that for another class. Let's not go too deep on support and resistance here. Are you following?
Hello, sir. Hello,
Yes,
sir.
sir.
Yeah.
Yeah, I wanted to ask, like, for the line that you drew in the middle there, from which support or from which resistance did you start drawing the line?
That's, you observe where price struggled. You can see here. This place was our resistance. Price broke through it. Now touch that area. That's the essence of this teaching that I'm doing here. That's the essence of this teaching that I'm doing here. If you can look at it now, you see price.
Yeah,
broke.
I'm talking about the green line. The green line. It is green in the middle, not the red one.
Be looking at the place where price struggled. You can see see this area now. This area, this is a resistance. Price broke through it. Now found support here. This particular line now is a support base. Broke through it again. Resistance. Came back to test this support again. All those places are what? They are strong, as in they are struggled areas. They are struggled areas that price was visited multiple times. Are you with me?
Yes.
So price visited this line now multiple times. How many times are you seeing? 1, 2, 3, 4, 5, 6, 7, the same line. 8, 9, 10,
11.
So they are all the same line there. You know, so that's how to pick your word support. We will do a full practical on it using a plain chart. So I want you to go, if you go to your chart, open a plain chart, then put all those lines, identify where price struggled. If you zoom your chart big like this, you won't be able to see it. But when you make it small like this, you'll be able to see it. Are you following?
Yes, sir.
Are you confused? Talk to me. Talk to me. This is a live session class. Talk to me.
No, we are moving along.
All right, let's continue. So all these lines that you are seeing here now is this thing that I'm doing here. Is this thing that I'm doing here. I said the trading markets are characterized by what? By a repeating pattern of higher highs and higher lows. So what are you seeing here? What are you seeing? As price is moving up, you'll be seeing what? Higher highs, higher low, higher highs, higher low, higher highs, higher low, higher highs, higher low. So it will be moving like that, you know, until to get to a point whereby market will get what? The bulls will get exhausted. They will start struggling. So this word, remember I said this is an impulsive, the higher highs are the impulsive move, while the higher lows are what? Are the corrections, retracements, or pullbacks. Then here now, market will now be what? For example, it will get to this point. And form something like this. So what are you seeing here? Who can tell me? Who can tell me what this particular area now? Who can tell me?
That is the support.
The double top.
Thank you.
Okay, double top. I thought you were talking about the line.
Okay, you know your chart patterns very well.
Yes, I'm trying.
You know your chart patterns very well. You know, this is a double top here, showing that what? That structure has changed. On seeing this, and I know that yes, bye to buyers. You understand? So I will now wait for me to get a full confirmation. How do I get a full confirmation that
From the support zone.
really structure has changed? You know, I will wait for price to break this last swing. You know, this is the last swing point that price made. The last swing point. So I'll wait for price to break that last swing point, which is this. Price broke inside it and do what? And retest.
So what's the line now? That line you drew, what is it called? Is that not the support?
Is it this particular one? This one here?
No,
Yes,
the
that
resistance.
that line, yes.
This is the
Support
neckline.
now
The
turned into
resistance.
resistance.
Yes, thank you. Support
What
now
is it?
turned what? Resistance.
Okay,
Support
Huh?
has turned into resistance.
okay, okay.
Support has found resistance. I didn't get that.
Support,
Support has now turned into resistance.
resistance.
Okay.
You know, before it was what? Here, since the line broke above it, here is our resistance point. This place now is our resistance point, right?
Yes.
So price now broke above here, now found support here, right? Bounce up again, now broke the support line here.
Okay,
This
okay.
particular area here, this small side here now,
Okay.
we now turned as resistant here. Here will now be resistant.
All right.
Here will now be resistant. It's no longer a support again to this
No longer a
particular.
support here.
Yes. So what happens now? Price
Keeps going down.
bam. You
And
can see that
retesting.
what? Price has visited this particular area again.
Hello,
Are you with
sir.
me? Yeah,
Yeah.
Is it, sir?
I'm with
Is
you.
it a must that the price, the market must retest back to that support?
You know, sometimes due to the momentum of the market, you understand?
Yes, sir.
Due to the momentum, sometimes you'll be expecting a pullback or a correction to happen here instantly.
Okay.
Sometimes it will not happen. Sometimes it will happen. But remember that what? You can see that a candle that will pop up here, you understand, will come
Yeah.
later on. Maybe price will visit this place here and run back to this place to complete its mission before coming down again. It happens.
Okay.
You understand? Sometimes
Okay.
you will see a complete retest. Price will break, retest there, and start what? Dumping.
Okay. Okay.
So on seeing this now, I will know that bye-bye to what? Bye-bye to buyers. Buyers are no longer in this market. You know why?
Okay. Okay.
I told you guys that it's always for you to get a good entry. If you're holding a swing trade, here is okay. But I will not enter here. Entering here is very very kind of, it's a 50-50. So I will wait for what? For me to make my entry here on seeing that what structure has changed. But me entering here, structure is not yet broken because this place now might end up being a triple top. Are you following?
Yes, sir.
Mhm.
It might end up being a triple top. It might end up being a head and shoulder. So I told you guys that price will visit this point, right? You can see what happened there. Price has visited this place. So here will now be support. Eh? Here will now be support.
Yeah.
Are you following? Then this place now will now be what? Will now be resistant if price should break below here.
Mm-hmm.
You see, here will now be what? Resistant. Then price will continue dumping. It has visited this place again as support.
Mm-hmm.
So as price is moving, remember I said it will be making what? A repetition of what? Of higher highs and higher low in an uptrend. Why making what? Lower high and lower low. Then this is our what? This is our lower low.
Lower low, and lower high.
Then this place is our lower high.
Lower high. That is in the downtrend.
Yes.
That's a downtrend.
You can see that what is not difficult. It is not difficult.
With practice, though.
With practice, it's not difficult.
Anyways, it's my first time. That's why I'm just kind of a little bit confused.
So that's how price will be moving. It will be moving, making what? Making all those repetition. And if price makes all these words, repetition, it will be visiting it. You understand? Like, just like BTC now. BTC chart, if you open BTC chart now, you will see that price will be visiting all those support areas, the resistance areas that price made since 2013. Price will be visiting them. 2020, 2021, price will be visiting them. It's a cycle. It's a cycle. Market is a cycle. So we are in a bearish cycle. Currently, we are in a bearish cycle. You know, one thing with crypto is that people don't want to hear bear. If you talk about bear, pardon? So if you talk about bear, people will attack you. They'll say, why are you saying bear? We want market to move. Nothing like that. As market is dumping currently now, it's creating room for people to be rich tomorrow.
Yes.
You understand? So
yes.
if you have money, this is the right time to invest. But you invest wisely. You pick projects that are what? That are solid to invest on. You understand? As the market is dumping currently, it will wash away Ponzi projects. What I mean by Ponzi projects that are not stable, projects that have not witnessed bearish market before. And we all know that bear market is very tormenting. It's very tormenting. Let me show you, for example. This is BTC. This is BTC. You know, so many people were caught off guard when BTC made a new all-time high. Are you seeing this chart very well? Are you seeing this chart? This is a daily BTC chart. Yeah. You know, price made, this was the previous all-time high that price made, right? Which is 64K. Then price now what? Broke down from that place, made what? You can see our higher highs and higher lows. It was moving impulsively, creating higher highs, until it gets to this point. Market becomes exhausted and formed what? Head and shoulder pattern. This is our neckline. Then market started dumping. It goes to this psychological support. I call it psychological support of 28K because price visited this area multiple times. You know, Then price now bounced. Price now what did what? Bounce up again, created all-time high here. Price created all-time high here. So people didn't see this particular thing forming here. This was what? A double top, a confused double top. The double top comes in different shapes and sizes. I will drop the picture in the group so you will see the different shape and sizes of double top and double bottom. So price now formed the double top here, started dumping. People said, BTC will go to 100K. BTC will go to 100K. I was laughing. How would BTC go to 100K? Eh? So people were not seeing this on charts playing out. What happened? Market started dumping since November. November started dumping, creating what? Bearish continuation pattern. Now, this is the place that we are. You can see that price is breaking what? Price is breaking below this channel. This is a bearish rising wedge. Hello? Are you confused?
Sorry, sir, which one do you call the neckline?
The neckline, look at the neckline here now. This is a double top. This is the neckline here, all this area.
Okay.
Now, price is trying to break. Price is trying to break above this bearish words rising wedge. This is a continuation pattern. Chidera taught you guys this. This is a continuation pattern. As price is breaking above below this place, BTC is in danger. BTC is in danger. So you can see that our daily is closing with a huge engulfing candle. Are you seeing it? Are you seeing it?
Yes.
So it's breaking below this what? This bearish rising wedge. So what will now happen? 37K is knocking at the door. It's knocking at the door. So price will break below this place. And if price will break below this place, then BTC is what? We are expecting 34,000.
Even 32.
We are expecting 34,000.
So
if price will break this 34,000, goodbye. We will see 30K again. So price will visit this particular supply zone. Are you following my analysis?
Yeah, right.
So here now, I'm not seeing the buyers, I'm not seeing the sellers. I'm interpreting what the market is doing. I follow it, and it has been playing out since. I sold BTC from 48K here, inside this channel. I sold BTC from here. Likewise, Ethereum. Ethereum own is 3,580. You understand? So, as a price action trader, you know, you'll be able to see things playing out on charts. So that's the essence of our training, to teach you how to see things. You understand? To make you what? To be a better trader. Technical analysis is technical analysis everywhere. Are you following? You can still use this thing that we are teaching you to do what? To trade forex. If you want to trade forex, technical is still the same thing. It's still the same thing, just different different fundamental analysis, but the technical still remain the same. So let's go to our normal discussion. So that's how my class is. So sometimes I do, touch some areas, to make you guys to see things, how things are playing out. So you can see my chart, and you see lines, and price respected those lines. Just like I've drawn this one, that the price will visit here. It will visit there. I've already known my points. Based on how price reacted there previously, it will touch there again.
You mean the lower zone, that last zone?
This one now, this one that I just put here now, price will visit there again. And if it breaks 34K, then we will now see 30K.
That means we'll be seeing 30.
Yes, now. Straight up.
Oh my God.
So market is bleeding, so it's bleeding heavily. Just wait for it.
People are yet to understand it too.
People are that they don't believe in bear markets now. They believe that BTC will move to 500K.
Honestly, this class opened my eye. I would say that it opened my eye, because the way I see candles is very different from what I learned here tonight. So,
yeah. What was making these market to fall? Like, is it that people are selling their coins, or
there is in market there are a lot of things that do put fear, that do make the market to crash. One, if you've been following the news, lately, as a trader, don't neglect your fundamentals.
Okay.
Don't neglect the news, don't neglect the fundamentals, because fundamentals will give the direction of the market. Why technicals is where you spot your entries.
Okay.
You understand? So the market has been not bearish, going by what is happening in other traditional markets. Other traditional markets, I mean by stock market. You can see that stock market is crashing also. Likewise, crypto markets. So, there was during early this year, February or this thing, there was a news that Federal Reserve cut interest rates. Federal Reserve is US Federal Reserve. US is #1 in terms of world economy.
Yeah.
You understand? So
yes,
now that US is #1, so they now cut interest. As they cut interest rates, then the hike is high. So it made a lot of investors to pull out their funds because they are paying high interest. That's #1. #2 is inflation. Okay. Inflation is high. Then #3 is what? Fear of war. Are you following?
Yes, sir.
So then another thing that can make market to crash is what? Risk aversion. Risk aversion, just like what happened during COVID. BTC crashed to 3,800 that time. Everything was down during COVID period. It started. So there was a lot of fear among investors. So those are the things that can make market to crash.
Okay.
And we all know that crypto markets, stock markets, they are speculative assets. Are you following? As
Like how?
they are speculative asset. What I mean by speculative asset is that the
Rumors can control it.
investors don't see it as a safe haven. They don't see it as a safe haven. You know, gold is a safe haven pair. It's a safe haven pair. As market is crashing, investors are buying dollar. That's why dollar is strong. Investors are buying Japanese yen. They are buying Japanese yen. If you look at dollar now, you can see that DSY is extremely strong. You can see.
Okay.
This determines
even gold is going up.
This determines what? The strength of dollar, DSY. You can see it has been going up since Biden entered as a president. It has been going up. So dollar is strong. During what is it called? Trump, dollar was down. During Biden, dollar is going up. So amid all this inflation and all that, dollar is still strong. So have you asked yourself, why is dollar still strong? You understand? So they hiked interest rates in order to what? To stabilize the economy, not to be hit by inflation. So
sorry, teacher.
Yeah.
The DXY, do you find it under crypto or forex or features? Where do you find it?
No, this is a forex this thing. You know, if you want to trade forex now, you must know the strength of dollar.
Yeah, that's why I'm saying, where do you find it under forex?
Yes, it's under forex. It's under forex.
Okay.
Under forex. Just like the way we measure. If I want to do my analysis now, first of all, visit BTC. I first of all know what BTC is doing.
Okay,
so
okay.
If BTC coughs, every other coin, every other project will catch code.
Yeah, it's true. Yeah.
So that's just the thing. Then let's continue with our class. Let's continue with our class. So you can see that's how price will be making what? Repetition. Price will be making repetition until the sellers gets exhausted. Then you will not see what? Another reversal. You know, reversals, you see reversals at the end of what? Of a trend. That's where you see reversal. Are you following? Chidera taught you this. You see a reversal at the end of what? A trend. What I mean by reversals is what? You can see double bottom, which signifies what? Bullish movement. You can see triple bottom. You can see inverted head and shoulder. You can see falling wedge. They are all what? Bullish reversal patterns. Then in bearish reversal pattern, you can see a double top. You can see a triple top. You can see head and shoulder pattern. You can see a rising wedge. What I mean by rising wedge is this. You can see, let's assume that the price is trending up. It's trending up. You will see something like this. Remember, I said price is trending up, so you know that it's uptrend. Are you following? So as price is trending up, it will be squeezing. Don't mind my drawing, you know. It will be squeezing. So you can see this thing now can still happen here. You see this thing now, this rising wedge. This rising wedge can still happen at this place. Eh? At this place that you have. Hello? Hello?
Yeah, we are hearing you, sir.
Okay. This particular rising wedge can still happen at this place that you have a double top. Instead of this double top, you will see this. You understand? So
yeah.
Once price breaks here, you will know that what? Sellers are in. Here will be our what? Our resistance. Here will be our support. Then support now turns resistance.
Is it a bearish pattern, sir? Bearish chart?
No, this thing is a rising wedge. Is a reversal, is a bearish reversal pattern.
Okay.
It only occurs at the end of what? Of an uptrend. So you'll be expecting this kind of pattern at the end of an uptrend, at the end of this place.
Okay.
You understand?
Okay.
It's a rising wedge. So you can still see a head and shoulder pattern. You know the one that I call head and shoulder pattern?
Yes, sir.
You can see something like this. Look at how I've mastered everything. Please, just try and be better than me. Yes, now.
The small, sir.
So you can see something like this. Yeah? This is our shoulder. I don't know why my mouse is kind of stiff today.
Head and shoulder. Can we say it forms a double bottom there?
No, that one is not a double bottom. We are here.
Yeah.
No, this is our, I'm seeing this now. You know that it's head and shoulder pattern now. Then you can see neckline broken. This is a neckline. Neckline broken. You can see structure broken again. Retest done, you know. So this is also a reversal pattern. It can still happen at the end of this uptrend. Are you following?
Yes, sir.
Yes, we are.
So I've given you what to see, what to look out for when price gets to what? To the end of an uptrend. Then downtrend, you can see another thing. You will see a double bottom, inverted head and shoulder. This thing now will now turn upside down. This particular one will turn upside down. This one will still turn upside down, giving you a falling wedge. Let me complete this. Let's assume that the price is dropping. Then you will now see something like this. Are you following? You can see breakout done. Eh?
Yes, we can see.
Price broke out, then retest.
This is a falling wedge.
You see? So this now is a falling wedge, which shows what? That the bulls are what? Are back again in this market.
Is it also showing a bull flag? Am I
You said?
correct? Is that a bull flag as well?
It's not a bull flag. This is a reversal pattern.
Okay.
This is a reversal pattern. You know, it's a bullish reversal pattern. Whenever you see this, whenever you see double bottom, falling wedge, it's a reversal pattern.
Okay.
So you can write. Trading markets are easy to identify. Comma. Don't try to complicate your analysis. They are very easy. Just like I'm explaining this now. You can see it's very, very easy. Very easy to understand. So I've given you how the bullish market looks like, how the bearish market looks like on charts using what? This diagram. So I've showed you when the structure changes from what? From an uptrend to what? To a downtrend. I even made reference to what? BTC, for you to see how what structure changed on seeing that double top at 69K. So don't confuse reversal pattern with continuation patterns. You understand? You know, in chart pattern we have continuation, we have reversal. Continuation patterns is the one that you have asymmetrical triangle, ascending triangle, bullish flag, bullish wedge. That's for bullish continuation pattern. Then for bearish continuation pattern, you've seen descending triangle. All those ones will be happening in between what? In between charts, in between an uptrend or in between a downtrend. You'll be seeing them in between charts, not at the end or at the beginning. Are you following, guys?
Yes, sir.
So continuation patterns,
Yes.
continuation patterns happens in between. As the trend is moving, it will be showing you what? It will be showing you some continuation patterns. So I said, use your brain and see what the market is doing. Full stop. According to statistics, trends are estimated to occur 30% of the time while they are in motion. So as the market is moving, making impulsive move, you will see the trend, it will be repeating the trend. It will be repeating the trend. So according to statistics, trends are estimated to occur 30% of the time. So while they are in motion, you've got to know how to take advantage of them. So just like I have here now, if I want to sell from this market now, I'll simply what? Put my sell here. I will sell from the lower high to lower low. Then take my profit at lower low. So how do I take my profit at lower low? I will locate the what? The previous resistance, which will now turn to what? Support. So this place now will now be my take profit area. You know, here will not be my entry. The lower high here will not be my entry. Are you following? Likewise here, if I want to buy, I'll buy at what? Higher low. I'll buy at higher low and take profit at higher high. I will locate. I will locate where the next this thing will be. Sometimes I will use my Fibonacci. That's where Fibonacci will now come in. Are you following?
Yeah, boy, yes.
That's where Fibonacci will now come in. Are you seeing that price respected 50%, made 50% retracement? If the red sign, this red one now is what? Whenever price touch either 50 or 61%, price will reverse. So having touched from the last here and the swing points, my entry will now be at 50% Fibonacci. My take profit will now be what? Either TP1 will be at negative 27%. I will still teach you Fibonacci. Just let's take it step by step. So for those of you that are finding it difficult to put your TP, to find your entries, look at how to find entries now. Mute yourself, please.
What?
Someone is raising hands. Hello. For those of you that are finding it difficult to find entry, look at how to find your entries. So please, you locate your what? Locate your market structure. Then put your what? Support and resistance. Then you know where to find your entry points at what? The higher lows if you are longing. Then the lower highs. Your entry must be on lower high, please. Let it not be on lower low. If you put your entry on lower low, you will chop surplus immediately. Hello? Are you following?
Yes, sir.
Yeah, we're with you.
Yeah, so I said, don't put your, if you are going up, if you are longing the market, make sure that your entry point is at lower high. Let it not be on higher highs. Then okay. if you are shorting the market, just like we are shorting the market now, let your entry be on what? On lower high. Just like I gave example with run. I gave example with this. I gave example with this. You can see my entry. I didn't put my entry here. My entry was on what? On lower high to what? To further lower low. That's how to set entries. Don't set your sell entry. Don't set your sell entry at lower low. If you set your sell entry, what will happen? Market will smash your SL. So any questions so far? Any question? I have 5 minutes to end this Zoom. Any question, guys? Ask me question.
In one of the previous class, I think the last two class we had, you mentioned having a course material. that you dropped in a group? Is it possible to paste the course material here, please?
Course material.
Yeah, I believe
Is
I
it
had.
Coach Chidera?
I can't read. That was a few. I can't remember. A few days back. Not the last class. The class before that. It was
Okay.
mentioned that. Yeah.
Okay. I was not the person that made that statement. You know, I started my own turn today.
Oh, okay.
Supposed to have classes today, but due to the BFT Zoom class, they had Zoom yesterday, so a lot of us, our attention was at that particular meeting.
Okay, boss. Thanks. Yeah.
All right.
That's fine.
Buchi David, please, can you ask your question? You are raising your hand.
Please, I have a question.
All right.
I'm not the one, but I have a question. On time frame, which time frame is the best to use? Like the best to use? Is it 4-ish or 1-ish?
You know, using time frames, it all depends on the kind of trader that you are. You understand? It all depends on the kind of trader. You know, if you are a swing trader, it's always good to make reference to what you first of all you do what we call scale down. Hello?
I can't hear you, sir.
Yeah, you do what we call scale down. You scale down from the higher time frame to the lower time frame. You know, then but as a swing trader, you know, people that are swing traders are people that can leave your trades, that can leave their trade for like weeks. Let's say 1 week, 2 weeks. They are called swing traders. Then on doing your analysis, you start from the what? You start from the weekly. For example, start from the weekly.
Okay.
Are you following? Then
Yes, sir.
you switch, you look at your weekly candle. You check how markets closed, how the weekly candle closed.
Okay.
You understand?
Okay.
Just like I was telling people that in the other group that what they should watch out how BTC close, how the weekly candle will close on BTC. This is the weekly candle here, weekly chart. As you can see, the higher you go, the smaller the whole thing becomes.
Yeah.
This weekly candle here. Last week closed bearish too. You understand? Last week closed bearish.
Okay.
This was the last week candle here. The candle before this one. It was last week candle. So it closed bearish. Then as a swing trader, having noticed that price closed bearish last week, what will happen? It will continue. So I will now come back to what? I will now come to daily and look at yesterday, how yesterday price closed. You understand? So that is how to switch or to switch what? What is it called? Time frames. Then you now go to your H4 to see how your H4 is doing.
Okay.
Then now make your entry on H1. That is as a swing trader. You make your entries at what? H1. Then as a scalper, that leave their trade for months, years, they are regarded as position trader. Those ones make their entry on the weekly.
Okay.
Or on the daily. That's why they made their entries from on the daily. Having scaled down from the monthly, weekly, and make their entry on the daily. Then for swing traders, they make reference to weekly, daily, H4, and H1 for entries. Then for scalpers, or for day traders, they make their research starting from the daily, H4.
Okay. Okay.
H4, then H1. You cannot find your entries on what? On lower time frames, M15 or M30. Then for scalpers, those ones that they don't want to spend time, like 30 minutes, they are out. Maximum 1 hour, they are out of the trades.
Okay.
You make reference to H4, H1, then use 5 minutes, M15 for your entries.
Okay.
So people raising hands. Tafadas. I can't pronounce the name.
Okay, so thank you.
Tafawazati. Please, if you raise your hand, please can you ask your question? Ayo Sky, ask your question.
Yeah, thank you. I have really benefited a lot from your class actually, and it has really so far. Thank you so much for that. Then my question is placement. Like if you are placing, where
Your network is breaking. I can't hear you well.
Hello.
Yeah, continue.
Yeah. Okay, I said, what's the best place? Is it what's the best place to place the Fibonacci? That Fibonacci, like, what's the best place to place it? Is it at the support or at the resistance?
No, Fibonacci is a tool that we use it to find the next retracement. You know, start from the last swing points, the lows or the highs, then locate the last swing point that price made. It will give you the direction of the next swing points. Are you following? Just like we have here now. Although we reserve your question when we get to Fibonacci, so you will not confuse others. Are you with me? Hello, the person that asked. Hello?
I'm with you.
So you can reserve your question, but if you want to place Fibonacci, you can start from the lows. Look at the lows here. Then the higher highs was the last swing point. You placed it there. Then here, the 50%, the ones that are marked red, is where the next impulsive move will start from. Are you following?
Okay.
So just chill. When we get there, I will tell you how to do it. I will tell you how to do it. I will tell you how to get these price reversal zones, PRZ zones. Okay. So I will show you how to set your Fibonacci. All right. Any question? Any other question? Ayo Sky.
I just asked the question.
Oh, okay. The other person, Tafa was. I don't know. I can't pronounce the name.
Okay, can I? Yeah, please.
Okay.
I just
don't have a question.
I just want to ask if you hold offline trainings as well, or just the online trainings.
Offline training. How? Is it
like
maybe
like if you train people
one-on-one?
Is there any place you hold your classes, like an address?
No, my class is basically online. Basically
Okay,
online,
that's what I'm asking.
but I can still hold one-on-one. That's if you want, but basically it's
Okay, are you in Lagos? Are you in Lagos?
Nah, no. I'm in Owerri, Imo State.
Oh, okay.
Yeah.
I will locate you one of these days.
All right.
Yeah.
All right. Yeah. So any other question? This question time.
Sir, please, sir.
Yeah.
The beginning of the class, you mentioned about trending markets, ranging markets, and chopping markets. All these things you say today, is it among all of them or just one? Like which one is it?
Today we treated trending markets.
Okay.
You understand? Yeah, we treated trending markets. You know. Then later on, maybe tomorrow, I will start with how to trade trending markets.
Okay. All right. Okay.
So then we'll now go to ranging markets. You will see how the ranging market looks.
Okay. Okay.
Then we'll now see how chopping market looks too.
Okay.
Yeah.
Thank
Any
you,
other
sir.
question? You're welcome. Any other
Good night.
question? You can ask me questions. Ask me questions, you know. Anything that any difficulty that you are experiencing in trading, ask me. I'm here for you.
Okay. We will ask you, teacher.
Oh, I'm listening.
I mean, I think I'll get it one of the days, but my problem is that of identifying where I need to start buying and where I need to know to put a stop loss and where I need to sell. That's where I'm having my problem. I've been trying to use the trend lines, but I notice it's not the trend lines that can help me to do that.
No, it's not trend line. It's not trend line. You know what? Just like I when I started this class, I said that you don't go against the trend. Don't go against the trend. First of all, the trend will give you, once how your trend looks like, whether uptrend or downtrend, it will be very easy for you to spot your support and resistance. Very, very easy. You understand? So if you want to observe your trend very well, just go to higher time frame, like the daily and your H4. They will show you how the trend is. Don't use lower time frame, please. Don't make this mistake. Don't look at lower time frame to determine your trend. Lower time frame are noise makers. They make a lot of noise.
Okay.
Lower time frame, you can use it to find your sniper entries, but don't use it to determine your market structure, please.
Okay.
Always use your daily and H4.
Okay.
The higher time frame tells more. So if you know your market structure, to do other market analysis like support and resistance, your zones, it will be very easy now to spot those areas. Mind you, I said don't buy at higher highs. Don't buy at higher highs. Let your buy be at higher low.
Okay.
If you want to maximize profits, let your buys start from higher low. Then you take profit at higher high.
Okay.
If you want to sell, let your sell be your sell entry be at what? Lower high.
Profits and lower
take
low.
Profit at lower low. But when you start selling from lower low, definitely you will hit stop loss. It is a must.
Okay.
Yeah.
Thank you very much.
You're welcome. So no further question, right?
There's one last question, please.
All right, go ahead.
The other time you were talking about the engulfing candle.
Yeah.
Then you made mention of the closing candle, that it matters a lot in respect to the previous candle.
Yes.
Yeah. So how important is the closing point now? Because there are some engulfing candles in which the previous candle and the present candles, they are right at the same they are at the same point. Let me say the same size. And there is no wicks. They won't have wicks, either the upper wicks or the lower wicks.
You know, just like what we have here.
That guy.
Just like what you have here. Right? No. If you're not asking questions, please mute yourself.
I tell you.
If you're not asking questions, mute yourself. So just like what you have here, you know, this is an engulfing candle, but just that the opening is not the same. The blue one is not, it's just slightly above, but it's still an engulfing candle, because this candle now consumed the blue one, right?
Yes. Yeah.
It consumed the blue one. You see this one? See this one in particular? It consumed the white one. Are you following? So,
yes,
sometimes price will not maybe start from where the opening of the previous candle. You know, but what matters most is what? On engulfing candle, you check if the white one engulfed the blue one, or if the blue one engulfed the white one. Are you following?
Yeah.
Yeah, so that's for engulfing candle, but other candles too, you can be able to identify them based on how they look like. So just go on chart, practice, identify, zoom in, so you can be able to identify them very well. Without zooming, if you leave your candle like this, now how do you determine the type of candle like this? Is when you zoom out, you will see how bold it is. Any other question? Yeah, hope you enjoyed the class.
Definitely.
All right. That's how my class is. So very, very interactive. All right, we can call it a day for now. Tomorrow we'll continue.
Okay.
Just go to your chart. Let me give you an assignment. Go to your chart and identify the trend. Identify the trend using your daily and H4. Identify them. You can use arrow. You can use arrow to identify. Then you use text to tell me uptrend and downtrend. Okay.
Okay, so
yeah, do it on higher time frame. That's the daily and H4.